Hello everyone, this is Yash. We are thrilled to have you join us today for this exclusive webinar on TDS and TCS amendments for financial year 25-26, hosted by Figment Global Solutions Private Limited. Tax compliance is an ever-evolving landscape and staying updated is crucial to ensuring smooth operations. That's exactly why we are here today, to bring you the latest amendments, insights and strategies that will help you navigate TDS and TCS effectively. We are honored to have CA Harsh Mehadia sir, a leading expert in TDS TCS compliance and Director of Figment Global Solutions, as our speaker today. With his deep knowledge and practical experience, he will guide us through the key changes and how they impact businesses and professionals. Without further delay, let's welcome our speaker, CA Harsh Mehadia sir. Now over to you, sir.
Good afternoon, everyone. Thank you, Yash, for the introduction. Thank you all for taking the time to join this session on the latest amendment to tax deducted at source. Myself, Harsh Miadia, and I'm glad I am here to guide you through these changes, highlight their significance, and help you navigate the compliance requirement effectively. In this session, I will be covering the key amendments which would be effective from 1st April 2025 regarding to TDS and TCS. Initially, I would be taking you down towards all the amendments, and post that we would be taking a small questionnaire where you can ask your queries, and whatever queries are there, we would try to help you out maximum possible at this webinar. I would be sharing my screen wherein I would be showcasing you the amendments which have been brought into. So, uh, Yash, my screen is visible to you.
Yes, sir, it's visible.
Yeah. So coming across to the amendments which have been brought into the TDS and TCS. So one of the key points to be taken care is that this time government has primarily level change in majority relating to the threshold limits. Whereas TDS rates and TCS rates have been changed only in one or two sections. There are no major changes relating to TDS rates, but there has been major changes relating to threshold limits. And the reason government has enhance the threshold limits in multiple section is because the taxation limits which has been brought into the new regime
Uh,
is
Sir,
now.
sorry for interrupting you. Your screen is stuck.
So, yeah, I have not
Yes,
changed the screen. I have not
now it's
changed the
visible.
screen. Yeah. I was just giving you a brief about the TDS relating to that during this amendment of 2025, government has not changed rates in many of the section, whereas government has enhanced the threshold limits. And the reason for enhancing the threshold limits is primarily due to the enhanced exemption limit in the new regime. So going to one by one section wise for the TDS, first we'll go across to section 193, interest on securities. Primarily, TDS on debentures, bonds, and other securities are being deducted in Section 193. Previously, there was no threshold limit for Section 194, 193. Now, the said limit is 10,000 from 1st April 2025. Uh, this section has now been very widely used because government has introduced TDS on bonds and debentures from first for listed bonds and debentures from 1st April 2024. So in the last financial year, many of the taxpayers TDS was deducted in this section, and to give them a relief, government has now brought a threshold limit of 10,000. Major amendment, Section 194A, wherein the threshold limits have been increased a lot for senior citizen. It has gone up to from 50,000 to 1 lakh rupees. For other than senior citizen, 40,000 to 50,000. Both these limits are applicable for the interest on deposits paid by bank, cooperative banks, and post office. Other than these three organizations, if anyone is making an interest payment, then the threshold limit has been increased from 5,000 to 10,000 rupees. Next, TDS on dividend. The threshold limits have been enhanced from 5,000 to 10,000 rupees. This is also last year, many of the companies have paid a lot dividend, So many of the shareholders TDS was deducted. Now government has enhanced the limit for dividend also from 5,000 to 10,000. The same goes for the income from mutual funds units also, 194K. The limits has been enhanced from 5,000 to 10,000 rupees. Uh, for section 194B, income from lottery, crossword, horse race winning, the previously the limit was aggregate amount exceeding 10,000 rupees in a financial year. Now, this was creating a cumbersome process for the lottery and the other organization to evaluate and check what has been the previous amount paid to that SSE. Now, the same has been increased to 10,000 rupees per single transaction. Section 194D, insurance and commission, limit has been increased from 15,000 to 20,000 rupees. Section 194G, lottery ticket commission, 15,000 to 20,000 rupees. Commission or brokerage, last year also the limit was increased. Now again, the limit has been increased from 15,000 to 20,000 rupees. Another important change, wherein many of the deductees would be applicable, is 194I rent. And it was creating a bit confusion also previously, that whether 2,40,000 per year needs to be taken as a complete year limit or divide by 12, 20,000 rupees per month limit. So the limit has been now enhanced from 2,40,000 per year to 50,000 per month. Now, whenever you make a rent payment, you will have to see that if your monthly rent payment is more than 50,000 rupees, then TDS would be applicable. uh, as per the previous threshold limit, if you were renting a property for 3 months only and the total rent payout was less than 2,40,000, the TDS was not deducted. Now, if you are renting a property having a rent of 65,000 rupees per month, and if you're renting it for 3 months also, then the TDS would be applicable because the limit has been changed from per year to per month. The threshold limit for Section 194J has also been increased from 30,000 to 50,000 rupees. And Section 194 LA, enhanced compensation on TDS of property, the limit has been increased from 2,50,000 to 5 lakh rupees. Now coming to the changes which has been brought to TCS, this were very much required because it was creating a confusion at the banking industry level also, and making a cumbersome process wherever the loans were taken. So now government has given a relaxation from the LRS and tour packages remittance, section 2061G, wherein the last year the threshold limit was 7 lakh rupees. If you take any outstation tour, international tour, and make a payment in dollar term through liberalized remittance scheme. The limit was 7 lakh rupees. Now the same has been enhanced to 10 lakh rupees. Second, LRS for education, if it is loan finance. Importantly, you have to take the condition it should be a loan finance. Previously, TCS was required to be recovered if we were taking a loan for our education purpose also. Now, government has given a relaxation, and no TCS would be applicable for LRS for education if it is through loan finance. And the most important amendment, 206C1H, purchase of good. Previously what was happening is that if the buyer is a non tax audit person and he is not required to deduct TDS, then the seller was required to collect TCS above 50 lakh rupees of transaction, and it was creating a confusion at the seller and buyer level, both the side. Now government has given a relaxation, the much needed relaxation, wherein no TCS would be applicable on the purchase of goods if the seller is non if on the purchase of good if you are making any limit of amount. So on purchase of good, no TCS would be applicable. A new section, TDS on partners remuneration, has now been introduced for the firms wherever you are making any interest payment, remuneration, commission to the partners out of the profit of the firm, then a 10% TDS would be applicable. exceeding if giving a threshold limit of 20,000. So a TDS at the rate of 10% is required to be deducted if we make any payment to the partners in the heads of remuneration, interest, or commission. Another amendment which has been brought a relief for the deductors is the omission of section 206 AB and 206 CCA. Previously, we were required to check all the deductees PAN number on Report Insight portal whether they are return filer or not. If they were a non-return filer and their TDS of 50,000 and more was deducted, then a higher rate of twice the TDS rate was required to be collected for as a TD. The rate was increased the twice of the TDS rate. But this was also becoming a hardship for the deductors to go on a live level check on the Report Insight portal whether the SSE has filed his return or not. So government has removed this section 206 AB, and 206 CCA is same section for TCS, wherein the rate validation was required to be done at Report Insight portal. So both the section has been removed from 1st April 2025. So no higher TDS would be applicable from 1st April 2025. Now coming across to the rate side, as I told you, there are not much amendment on TDS and TCS rate. Only section 206C one, the TCS rate for forest produce has been reduced from 2.5% to 2%. Now, coming up across to the tax rates, which would be applicable for Section 192, as we are covering amendments and TDS and TCS. The brief of about the new tax slab rates, because average TDS rate is applicable for Section 192. So the government has now revised the rate for new tax regime, wherein the basic threshold limit has been increased from 3 lakh to 4 lakh. Rates have been the range has been revised, which you can see on the screen. 4 lakh to 8 lakh now 5%, 8 to 12 10%, 12 to 16 15%, 16 to 20 20%, 20 to 24 25%. A new slab rate has been introduced, and above 24 lakh a 30% rate would be applicable. Apart from this, surcharge and cess would be additionally applicable as uh, as per the limits. Government has also given a relief on 87A rebate. Previously, the rebate was 25,000 rupees. The same has now been enhanced to 60,000 rupees. So if we calculate the nil tax rate for a SSC, it would be zero if his total income is up to 12 lakh rupees. But if his total income increases from 12 lakh rupees, then as per the slab rate as I given you above would be applicable, starting from 4 lakh rupees of income. So this is all about the TDS and TCS amendment. Now I'll ask. It was nice giving you the brief about the TDS sections and the amendments. Yes, we can go ahead with the question and answer. If a questions, if any of our uh, people require any understanding, and if have any specific questions, we can give answers on those.
Yes, sir. If anyone have any questions, so please share in the chat box.
So we have a question from Natarajan sir. He is asking about how to square off the TCS payable GL after the removal of TCS. So I'm bit as whatever TCS which has been collected from your deductee, you will have to remit the same to the government, and a return of 27 EQ needs to be filed for the same. So I think if you are, is there any further query, Natarajan sir, you can ask for the same. Then we have a next question from Nitesh ji. If April rent is 60,000 and May rent is 40,000, do we need to do TDS on May rent? So for the April rent, the TDS is applicable, but for the May rent, it would not be applicable, as now the threshold limit is 50,000 per month. So if your rent is getting reduced below 50,000, then no TDS would be applicable. Kulkarni sir, I have answered you with the Nitesh sir question. In case of rental, it is 50,000 per month. In case we pay 3 months rent together as advance rental, any if you make any advance rental, it would be taken per month limit only, and 50,000. If you are making a advance payment of 3 months, no TDS would be applicable. Yes, if your rent is below 50,000, then there is no need to deduct TDS the complete whole year. Yes, it is for residential and commercial property. Rent section is same. There is no separate section there. If interest is paid to a partner of LLP, then under which section TDS to be deducted? It should be deducted under section 194T. Previously, note TDS was required to be deducted for interest also if we are making payment to the partner, because it was part of the profit and loss. Specific section was there, but now with the introduction of section 194T, we need to deduct TDS under section 194T for any type of payment made to the partner, remuneration, commission, and interest. Yes, a small clarification. TCS was applicable on sale of goods. Very correct, Mr. Manishji. Inoperative PAN will attract higher rates as amendment from last financial year. For inoperative PAN numbers, the TDS would be applicable as per no PAN cases only. Yes, Jha sir, TCS would be applicable at a higher rate if the PAN and Aadhaar is not linked. So Mohitji, the question you are asking, the buyer turnover previous financial year not exceeds rupees 10 crore, still buyer deduct the TDS under section 194Q at the rate 0.1% above the value of 50 lakh rupees. There could be a scenario where the buyer would not be using the presumptive scheme, and due to which he would be auditing his accounts. And since his accounts are getting audited, then the TDS applicability would be there for him, and due to which he would be deducting TDS at under section 194Q. If your landlord is a NRI, what was the TDS rate? It would be applicable as per section 195. And it would be 30% plus 30% plus cess. And in case if he is submitting DTAA, then reduced rate would be applicable. Yes, please share the PPT to all the joinees as we have received the email IDs of all. So
Yes, sir.
please
Yes.
do share all to all the PPT. This.
There is a one
Sir,
question in question and answer also.
if I made a scrap sale for current financial year 25-26, no TCS would be applicable. No, Yashwanji, TCS would be applicable for scrap sale because scrap sale has a separate section on which TCS is applicable. The section which has been scrapped is relating to the turnover any type of sale. If I am making above 50 lakh rupees, and if the I'm making the sale to a person who is not required to get tax audited, in that scenario TCS was applicable previously. Any type of sale if I'm making to a buyer above 50 lakh rupees, then TCS was applicable if the buyer was not required to get tax audited. In For that scenario only, TCS has been removed. But now, but for your question, for scrap sale, there is a separate section in TCS wherein TCS would be applicable. So, Rashika ma'am, the point we have also taken up with Traces Department and other income tax authorities relating to the PAN and Aadhaar getting linked post art deduction. So, the scenario is that as per the March circular, which talks about the PAN Aadhaar linking higher TDS rate applicability, in that, as per the authorities, it states that at the time of deduction, the PAN and Aadhaar should be linked, and if it is not linked, then higher TDS rate would be applicable. Now if a person is getting linked his PAN and Aadhaar post the deduction, at that on the day when you have deducted, higher TDS would be applicable only. So there is no other option. We are left with another 3 minutes for the meeting to end, so we'll drill down fast. Inoperative PAN, higher tax rate would be applicable in this financial year. Yes, inoperative PAN number, higher tax rate would be applicable. Doing professional service manager deduct 10% TDS with vendor. If vendor given reimbursement invoice or conference related can be deducted. For the last question, section 194J, if you are getting any reimbursement bill, if the bill is in your name, then no TDS is required to be deducted. But if it is not in your name, then perquisite TDS would be applicable under section 194R. So, Yash, over to you.
Thank you, sir. Thank you for giving the insightful. Thank you all for joining our webinar. So we appreciate your time and hope you found it valuable. Thank you, sir.
Thank you. It was,
Thank you for
thank
joining.
you all for joining in such a large numbers. Thank you. Thank you.
Thank you, sir. Thank you all.